Did you know that Policy Bazaar was set to become the first Indian digital startup to go public this year, even before Zomato?
नहीं.
Namaste everyone, welcome to our YouTube channel. I am Pooja Sharma. In this video, we are going to do an in-depth business case study on Policy Bazaar, which is set to go public this year. So let's get started. So let us first quickly see the history of Policy Bazaar when it all started. Policy Bazaar was founded in June 2008 by Yashish Dahiya, Alok Bansal and Avanish Nirjar, starting out as an insurance comparison website. At that time, the insurance industry of India was not very transparent and the insurance policies were mainly sold through agents. Policy Bazaar started by listing out details of multiple insurance policies for customers to choose from. Basically, the website began as a price comparison website and an information portal for learning about insurance, but later on it expanded to become a marketplace for insurance policies. And in 2008, InfoEdge, which runs the famous online job portal Naukri.com, invested a seed fund of rupees 30 crores in Policy Bazaar, and that's where it all started. Before we move further, tell me in the comment section, have you ever purchased an insurance policy from Policy Bazaar? Yes or no? Let me know in the comments. If you did, how was your experience? Was it good? Was it okay, or was it bad? Because now we are going to see what percentage does Policy Bazaar earn on every policy that it sells and from whom does it earn this money. So let's start with that. Okay, so here you must know that although Policy Bazaar was founded in 2008, it wasn't until 2013 that it could sell insurance policies to people like you and me. It was only after IRDA, Insurance Regulatory and Development Authority of India, passed the Web Aggregators Regulation 2013 that they became eligible to do so. Now, to see how much Policy Bazaar is allowed to earn, we will go to the official IRDA document. So this is the revised edition of 2017. So you can see here it is mentioned that this regulation document 2017 is the updated version of the one IRDA had made in 2013. And it's written here that these regulations, they supersede the one that was made in 2013 with effect from the date of Gazette notification. And now let's go to the page number 14 where we'll find what we're looking for. Here. Now if you see the point number 3, it is clearly mentioned that a flat fee of not exceeding 50,000 per year towards each product displayed by the insurance web aggregator in the comparison charts of its website, subject to an overall ceiling as specified under the rewards portion specified in the IRDA Regulations 2017 issued by the authority. Now what this means is that Policy Bazaar will get paid a flat fee of not more than 50,000 by different insurance companies like HDFC, Max Boba, Tata Alliance on every product of theirs that Policy Bazaar lists or displays on its website. Now is that all? No, it isn't. There's more to it. There's another part to it. But for that, we need to check out the Insurance Act of 1938. So let's check out that document. So this is the document. This is a 123 pages document, the Insurance Act 1938. But luckily, we don't have to read all of it. We just need to visit the page number 3 where we'll find what we're looking for. We have to check out point number 42E. Now read this out. And it's written here that no intermediary or insurance intermediary shall be paid or contract to be paid by way of commission, fee or as a remuneration in any form an amount exceeding 30% of the premium payable. So what this means is that Policy Bazaar can get a maximum of 30% of the premium we pay to these insurance companies. Now we are going to see 5 key competitive strengths of Policy Bazaar. Number 1, the company has been able to build a strong digital brand by offering consumer-friendly services. Now this is a huge moat for them. Because you must realize, unlike in the real world, where it is easier to build trust as we get to meet, feel, touch, and interact, in the digital world, it's so much harder to build the trust without meeting people face to face or in person. So, this is really a huge advantage for Policy Bazaar. Second, huge database. As Policy Bazaar serves customers across different demographics and income levels, the data has helped them grow their platform immensely by offering tailor-made financial services to different customers according to their needs and conditions. Third, by automating various aspects through the product value chain, Policy Bazaar has been able to keep a capital efficient business model with very low operating costs. Now, if you're wondering what a product value chain, it is nothing but an entire chain of companies' activities in the creation of product or services, starting from the point of receiving the raw material and to the end point of delivery of the final product to the market and everything in between. Fourth, Policy Bazaar has a high renewal rate which indicates the sustainability of their business in the future. Now coming to the fifth and the last point is management. The founders Yashish Dahiya, Alok Bansal and Avanish Nirjur, they have an experience of almost 2 decades in this particular field. Not only this, they have a deep understanding of the consumer pain points and also the structural problems connected to the insurance service industry. Now, in the last section of this video, we are going to see how much Policy Bazaar is planning to raise from the stock market through IPO and for what purpose. The IPO consists of a fresh issue of shares worth Rs 3,750 crores and an offer for sale for Rs 2267.50 crores from the existing shareholders and promoters. Now, the offer for sale is nothing but a scheme where the promoters and the existing shareholders sell a percentage of their shares to cash out or liquidate their investment. But for this video, we are going to concentrate on the fresh issue of 3,750 crores. Let us see where Policy Bazaar plans to spend this money. So, until June of this year, Policy Bazaar was purely operating as a web aggregator of insurance products. But now, having received its direct insurance broking license from IRDA, it is now planning to develop close to 200 physical retail outlets, and for this, they expect to spend up to 150 crores. And all this is planned to set up their offline presence by the end of financial year 2024. Now we are going to talk about 4 areas where Policy Bazaar is planning to spend its capital. Number 1, enhancing the visibility and awareness among the customers by involving or investing in brand building activities and to educate the customers. Number 2, global expansion, that is, expanding its presence beyond India. Number 3, acquiring smaller big companies which will help them grow their business even further. And number 4, acquiring new customers while deepening the relationships with the existing customers. The Zomato IPO has broken the myth around loss-making startups being unable to list themselves in the public markets. It has shown us that the retail investors are now assessing the startup IPOs on the basis of their presence and growth opportunities. However, we still have to keep a closer eye on how fast these companies can show positive fundamentals and profitability. With bigger IPOs like LIC also coming up, we hope that it steers the Indian business ecosystem in the right direction. That's all for this video. Thank you so much for watching. You're still here. Why? What are you waiting for? Oh, so you're waiting for the end card where we do this thing, subscribe and like and all. What's the point? I'm not going to do this today. You guys don't even subscribe. You don't even like. I don't know if you share with your friends. I don't have any proof of that. I'm not going to say that. Fine, I will say this, okay? Thank you so much for watching this video. We hope you enjoyed it like we did as much while recording the video. Thank you so much. Stay connected. Namaste, bye-bye and take care.